Well, as another school year closes in, many people that are setting aside money in RESP accounts realize they're one more year, one step closer to their kids going to post-secondary. So it's not a bad time, as summer approaches and the school year shuts down, to revisit RESP planning and the impact of the most recent 2011 federal budget. RESP programs have been around for a number of years, and they certainly offer an attractive incentive to taxpayers to pre-fund educational needs. Many contributions that go into RESP accounts qualify for what's called the CESG, or the Canada Educational Savings Grant. And this grant is 20% of your deposit up to a maximum of $500 per year. So there's some significant grant money available when you're setting aside money for post-secondary schooling using the RESP accounts. Another benefit of RESP accounts is the money grows tax sheltered in the years waiting for post-secondary to arrive. So building some context, I'd like to just overview the two main types of RESP programs and then comment on the 2011 budget changes. We had originally in Canada more simplistic RESP accounts that were set up one account, one beneficiary, and they now call that individual or non-family plans. And so in these types of RESP programs, you have one beneficiary, and the beneficiary doesn't even have to be a blood relative of the donor. And that beneficiary really can be named even at a later date. And grants can be available on these types of RESP programs. Obviously, the beneficiary has to be under the age of 17. And there's also the Canada lifelong learning bonds that can be available to these types of accounts. And so those grants and bonds still apply to these types of original programs. But the key here is one beneficiary per account, and the beneficiary doesn't even need to be a blood relative. So sometimes you'll see, people setting these up for sort of their godsons or goddaughters, as an example. Well, not too long after RESPs and these individual accounts started up, a few years later, CRA launched some adjusted legislation allowing people to set up what they called family RESP programs. In this case, the beneficiaries, and there can be more than one in an RESP program, they have to be connected to each other by blood or adoption to the subscriber or to the donor, same thing. And so in these family plans, you would pool the deposits together, and you'd pool those deposits and allow the multiple beneficiaries to sort of use them in whatever fashion was deemed appropriate. You could still get those CESG grants, the 20% grants up to $500 per year. You could still get the CLB, or the Canada Lifelong Learning Bond, entitlements if it qualified, just like in the other types of RESPs. And the difference here is that you had really a family as defined by adoption or blood, and a pooling of the assets within the RESP program. So this legislation, in many instances, in many applications, was sort of better than the individual RESP programs. And so, time marched forward, and a number of years have since passed on the family plans, and now the federal budget of 2011 launches, and they have changed the rules on the original individual plans, one beneficiary, one plan. What they now say post-2011 is that an RESP, even if it's in individual plans, that you can pool it amongst siblings without tax penalties and without disrupting the ability to get those CESG grants or the CLB entitlements. And so they're allowing that pooling amongst multiple individual plans if they're connected by adoption or blood, and gaining that pooling advantage that the family plans have. This is a great adjustment. It's a reason to talk to people that did the original planning of multiple RESP programs, and effectively equalizes this opportunity of sharing family resources amongst multiple children or multiple family members. And so those who sort of originally set up the RESP programs in the multi or the multiple individual context, they no longer have to strain or worry about how they're going to manage it at the draw stage when the kids go to school. And it certainly provides interesting discussion now on the ability to pool and what that might mean in a family context. So the 2011 changes were quite positive to RESPs, and I hope everybody enjoys their summer and has a chance to sort of revisit where they're at with their RESP programs.